Welcome! Today we are taking a closer look at how crypto assets are regulated in Europe. What rules are already in place, what's changing, and what you need to know as of 18th of October 2025, whether you're a business, a service provider or an investor. Hi, I'm Uli, and in this video we'll go over how crypto regulation works in the EU, the key milestones and upcoming deadlines, how supervision is evolving, and what this means for companies and users in practice. Let's get started. Key terms and scope. Before we dive into the details, let's go over a few basic terms. Crypto assets. Digital representation of value or rights that can be transferred or stored electronically using blockchain or similar technology. Stablecoins. Tokens linked to a fiat currency or other assets. In EU law, there are two main types. E-money tokens, called EMT, pegged one-to-one to a fiat currency, and asset reference tokens, called ART, backed by a basket of assets or other currencies. CASPs means Crypto Asset Service Providers. These are companies offering services like exchanges, custody or portfolio management. It's also important to know MiCA doesn't apply to crypto assets that already fall under existing EU financial laws, unless the regulation says otherwise. With that in mind, let's move into the main framework, the core regulation, MiCA. The backbone of EU crypto regulation is MiCA, the Markets in Crypto Assets Regulation. It came into force on 29th of June 2023. Key stablecoin rules started on 13th of June 2024. The rest, including CASP authorization and disclosure rules, apply from 30th of December 2024 with a short transition period for existing providers. MiCA introduces one unified set of rules for all EU member states. It closes the old gaps and allows license passporting, meaning a CASP authorized in one country can operate across the EU. It covers everything from token issuance and trading to governance, transparency and consumer protection. In short, MiCA brings crypto fully into the regulated financial space, aiming to balance innovation with trust and stability. Who it applies to? MiCA applies to issuers of crypto assets, including stablecoins. They must meet strict rules on governance, transparency and reserves. Service providers, CASPs, exchanges, custodians, advisors or trading platforms. Trading admissions. Crypto assets need to meet MiCA rules before being listed in the EU. Key obligations include a white paper for public offers, governance and risk controls, capital and reserve requirements for stablecoins, and authorization for all service providers. Existing providers have up to 18 months to obtain a MiCA license. Once approved, they can passport their license across the EU. Ongoing rulemaking. MiCA sets the main framework, but many details come through. Delegated acts and technical standards, often called Level 2 and Level 3 rules. As of mid-2025, some of these have been finalized, but others are still in progress. That means businesses must keep an eye not just on the law itself, but also on the new guidance coming from the European Commission, ESMA, and national regulators. Oversight and AML. Now let's talk about supervision and anti-money laundering. On 6 October 2025, EU regulators warned consumers that crypto assets still carry risks and that protection under MiCA can vary depending on the product. The EU is moving toward centralized oversight, with EMA expected to take a stronger role to reduce regulatory fragmentation. National authorities still issue licenses, but consistency across countries remains a challenge. On the AML side, the new transfer of funds regulation now applies the travel rule, requiring sender and recipient data for crypto transfers. In short, The rules are in place, but consistent supervision and full consumer protection are still being built. Let's talk about timeline and deadlines. Here are the key milestone dates. 29th of June 2023, MiCA officially enters into force. 30th of June 2024, stablecoin rules become active. 30th of December 2024, CASP authorization and disclosure rules take effect. Up to the 1st of July 2026, end of the transitional period for most member states. Some countries like Ireland and earlier on the 29th of December 2025. So by late 2025, most firms should already comply with MiCA's main provisions, with full compliance just a month away. What this means in practice. For businesses, if you issue tokens or stablecoins, you need strong governance, transparency and reserve management. You'll also need approval from your national regulator. If you're a service provider, you must get authorized under MiCA, build AML and KYC systems, manage risk properly, and treat consumers fairly. For investors and users, always check if your provider is EU authorized. Remember, supervision can differ by country, even with passporting. Look for white papers, risk warnings, and governance details before investing. For startups, start preparing early. The transition is almost over. Build compliance into your business model now. Key challenges ahead. There are still some big challenges. Uneven supervision. Member states are moving at different speeds. Rising compliance costs. Small firms may struggle to meet capital and reporting rules. Consumer protection gaps. Regulators warn protection is still limited for some assets. Cross-border issues. Some countries may resist passported license if they see weak oversight. Innovation risk. DeFi tokenized assets and new stablecoins may stretch the limits of current rules. So compliant isn't optional anymore. Staying alert is critical. Recent developments. A few updates worth nothing. On 16th of October 2025, the Financial Stability Board warned of major gaps in global crypto regulation and called for stronger international coordination. The European Commission is consulting on giving ESMA more power to supervise crypto service providers directly. Several EU countries are reviewing and possibly shortening their MiCA transition periods. Ireland ends on 29th of December 2025. This shows the EU framework is mostly built, but the ecosystem is still moving fast. What to watch next? Looking forward, keep an eye on finalization of Level 2 and Level 3 acts, setting detailed rules for IT, risk and reporting, how member states apply MiCA and adjust transition timelines, the centralization of supervision under ESMA, stricter stablecoin rules and the European Central Bank's role, regulation of DeFi and tokenized real-world assets likely to evolve in 2026 to 2027, and continued global coordination among regulators. The main law is done, but the enforcement and technical rules are still evolving. Staying ahead is key. Quick checklist for firms. If you are active in the EU crypto market, here's your short checklist. Check if your token or service falls under MiCA. Prepare your white paper and reserve structure. Map your authorization process and gather documents. Review marketing and disclosures for MiCA compliance. Follow updates from your national regulator. For investors, verify that your provider is authorized. Keep an eye on delegated acts and new guidance. Follow this and you'll be in a strong position as the EU crypto regime matures. To sum it up, MiCA is Europe's first full crypto regulation. Live since 2024. It covers issuers, service providers and stablecoins. Oversight is becoming more centralized but uneven in places. Firms must act now. Compliance governance and transparency are essential. Consumers are better protected but should still stay cautious. The next big steps: delegated acts, national implementation and cross-border supervision. As of the 18th of October 2025, Europe is officially in the regulated crypto era. If you found this helpful, please subscribe for more insights on crypto regulation, fintech and digital assets. Leave a comment below which country or regulator should we cover next. Thanks for watching. I'm Uli and I'll see you in the next video.